Alhamdulillah. To the red all I know is I need to find if I have to the red there's a path to you. And I am Good morning, guys. Good morning, everybody. Um, so we're just going to be doing a breakdown shortly of everything that happened during the week. Okay. So everything that happened during the week. Let's go. You know, price action lately has really been very choppy. The whole price action, everything, the charts, everything just looks very confusing in recent times, and it's better to realign, to plan, to check if you're not making mistakes and all that. And I'm going to be starting with GBP USD for today study section. GBP USD. So I have with me here my own notes, my pen and my journal to check what we're doing as we analyze this. Okay. You did disturb my ear. Which noise am I making? So somebody let me confirm. Is the sound okay? Please confirm over there on your own end if the sound is okay or not. If you're in the live session, please help me confirm if the sound is okay. Help me confirm if the sound is alright. Let me see. Is the sound alright? Is the sound alright? Okay. I guess it is because I just checked on my own end, so it is. Alright. What we're going to do is we just continue. Start off with GBP USD, right? We'll start off with the month of July. July, yes, here. So in the month of July, we'll obviously like go back a bit, go back a notch to check like the previous month to see how price action played out. But let's just see what price has been doing of recent. So before we got into July, the last structural broker structure was here, leaving this level here as the origin. All right, like the origin of the broker structure, which is like the structural range. So if you call this a structure high, this will be structure low, structure high. That's what I'm trying to say. Okay, so it means that until price goes past this level, it is not yet bullish. All right, it's still bearish. But down further to the 2-hour time frame, I usually prefer the 2-hour time frame because it gives me, or it gives us clear direction of price action, then broker structure and all those things. So if you look closely, before price eventually took out this here, price broke structure here. So this is a broker structure here, right? We call it so that's the broker structure there, and he also did the same thing again here. And there's a rule I always go by. I'll tell you that two broker structure tells you your trend. So before price took out the major high, it already shifted this direction. Now this is the one that we refer to as the change of character, in which instead of price coming down to break structure, it breaks structure against the original trend and then it continues. So here is where the trend was established to be bullish at this level. Okay, now after this you can see that price continue going bullish, and every POI was used or mitigated. You can see other block was mitigated here. You can see the other block was mitigated here again for price book structure to the upside here. Then this is another record structure, but this is like a structural liquidity, engineer liquidity stuff, because there's a rejection candle here, and so price had to engineer liquidity close to that level first and then pulled off. So when you're looking at the structure, you can clearly see that it's bullish, but we did not come to this assertion just like that. We came to the conclusion based off from these two breaker structures. So the first thing I would like to state here is the easiest way, right? So you can pen it down, you might not pen it down, whatever you're doing, no problem. So for me, I'm studying. So the easiest way, right, to tell your trend is the sites, right, of two breaker structure in a particular direction. So in a particular direction, you have to see two breaker structures in a particular direction. So even in as much as, for example, you have maybe this whole move coming down, right, and you see it to be bearish like this, but the moment you see something like this, 1, 2, this whole bearish move, somebody might say, okay, this is an internal trend. We're not dealing with internal or external. We're not trying to complicate things. We're trying to simplify them to the barest minimum so that we can understand, because the earlier you are able to interpret price action, the faster you can execute, you know, and you are not left behind. So instead of you waiting that, oh, the structure is still bearish, the structure is still bearish, you know what what this does is, you would be trapped in your mind that, oh, when price comes like this, it's supposed to sit still. Do you understand that? Okay, no, the structural liquidity or the structure is still bearish, and so all of this is just price just, you know, doing whatever it's doing, and if it comes here to sell, this is what majority of people will be doing. But then you fail to understand that the structure has already shifted. One major mistake that many people do is that you trade your past ideas while you are supposed to fix your mind on the present things that are happening. Using this as a clear example, the whole trend is what? Bearish. I showed you from the 4-hour time frame, you saw it clearly that the whole trend is bearish. So we could easily say, okay, yeah, we want to take like a sell when price gets to this side because that is the structure. But immediately you see price get there, do you see any respect? No, the trend was not respected here. Why? Because the trend has already been confirmed here at the first break, the second break. That was all we need, and then price uses key level, moved off from here. If you trade off key level, today we're not doing all those plenty things, we're just simplifying market structure and studying what price has been doing. So take this off, and that's what you see GBP do here. So price uses engineer liquidity, bought off from here, and then also still came back here, swept the major liquidity here. And I know that this trade now, I would have taken this trade because this is like the major liquidity, major. If you go to 4 hours, it's like the major low here. This is the major low. So it came back, swept liquidity before eventually moving on. And it didn't just sweep liquidity like that. It used, you know, you'd have heard of Quasimodo. So you're supposed to use this, but okay, you're supposed to use this, right? The field break. You're supposed to use the field order block. Is how Quasimodo work. So you know, when price is coming down like this, when you're saying you want to use for a bullish scenario, but you say, okay, I want to buy when price gets to this level, I want to buy from when price gets to this level, it means that you are waiting to see a reaction of the particular level. So when price came here, you can see that price reacted off from it before eventually taking it off. So in this case, this is no longer a field break, because a field order block, because when price got there, you can see reaction off from it. So what do you then do? You move your attention away from the past and take it to here and mark out the OB and wait for your what reaction, and that's where GBP USD did what reacted off from again. So we had this first one. Just in case you missed it, then you'd have gotten this, and then it was like an easy stuff, and it went up from there. Now okay, hold on. So after going up from here, right, after price, pulled off from there, so after price pulled off from there, now somebody might say, you see this move here, I want to make sure I don't miss it. You see this move in this level here, you might say, okay, using the two break of structure principle, the two break of structure to tell your trend that maybe the trend shifted here, but no, that's wrong, because you need to be very smart. If you see what I did something like this. So let's say we have a bullish move like this, established bullish move like this. Notice what I count as the break of structure to the downside. I don't care if it does this. No, I'm okay. I need to see one. This is one, then two. So it is in a particular direction. I'm coming. I'll explain what I mean by that. You see how price has been going up here. When it was coming down, did it make a break of structure in line with this down move? Yes, it did. It was one. So it needed to make another one, which is to make it two, before I change my bias from bullish to bearish. That's just basically how this whole shit works. Alright, that's just how it works. Nothing else. That's just how it works. And so we have price use this, they moved up, and now just recently, we saw price break out from this very big level here, and then left the fair value gap. If you go to 4 hours, you see the fair value gap, very long fair value gap. So meaning that we are now in a key level where price broke off from. So if you see here now, you see that this is like a resistance level before. Price sold off, and now price can buy off from here. But I would like to tell you that to simplify what you are doing, there are sometimes that price is going to trick you. Yes. And the reason why I'm not going to be using this fair value gap is I'm using OB here because I want price towards engineer liquidity. So once engineer liquidity, we have a move just like this to the upside. Only if we have confirmation, but then this is for GBP USD. We're not framing bias yet. All we're just basically we are doing is we are checking the price action of leads to see if if it's the problem is from to see if the problem is from you, or it's just price that is just playing with you or toying with your mind. Okay, you see price is just toying with your mind. All right, now so let's proceed. Yeah, so if you see now, if you wanted to take positions, like you wanted to leverage on these trades, it would have been, some of them would have been so easy to move with. Okay, this is the 1st of June, so some of them would have been easy to move. What do I mean by that? Now personally, me, I don't trade until liquidity has been swept. I would not trade until liquidity has been swept. That's just me. All right, I don't know about you, but that's just me. So you see here, I might want to go down to the lower time frame to then check if price gave me like an entry in that level. Do you get it? An entry in that level. My trades are not that, they're not perfect though, it's not like they are perfect, but let me just show you a little breakdown of what I would do. Like, I know that this trade now, this particular one, I'll miss this particular one here. I would not miss this one, but I'll miss this one. Why I would not miss this particular one is because when price mitigated, the POI shifted. So when it shifted, I'll use 23.6% here. 23.6%. I don't really use PDRs. I use PDRs, but not really often like that. I use more of the Fibonacci too. So that's this one. But this one I would have missed it because after price swept the liquidity here, it shifted but didn't give any entry. So that's quite alright. You can see that the next time price gave an entry is here. So after price swept liquidity here, what do you see? Is there a shift? That's the only thing I always want to look for. So this is it here. Price shifted it here. And so we are just leverage, and you can see that the entries are only coming only after there's a confirmation. So if you leverage on something like this, you'd have made, you know, good money from it. And then you can also see this major sweep that I said you should have taken. Now this one I would not use 23.6%. I will use 50% in a case like this. So here I will use the Gann box. When price comes into 50%, I take the trade. And I remember this particular GBP buy, and I take it to the external range liquidity just there, like that. So basically that's it. So when you go to like maybe 2 hours now, you see what the trades. So this was the sweep of liquidity here. This was the major sweep of liquidity here. So, and then you know this is a Quasimodo entry after a sweep of liquidity. Now one thing I want you to put in mind is when you have a structure like this, whether bullish or bearish, and you see price sweep liquidity like this, okay, you can use that level for a re-entry. This is classic, what we call Quasimodo entry. All right, it is what we call Quasimodo. So you can use it for entry. So only if price sweeps this liquidity and breaks structure. Usually some people will say, okay, no, it needs to have an inducement. Not necessarily. Honestly speaking, not necessarily. If you see a sweep of liquidity, what usually will follow, or what usually will, and now pay attention to something. This sweep of liquidity, yeah, the low that is being swept, that low used to be an origin of a break of structure, meaning that that low was responsible, this low was responsible for breaking structure. And so price just comes back there, raid the liquidity that is set below, and then continue. It is not any kind. For example, I'm saying this now in aspect to using it for Quasimodo entry. For example, this one was a sweep of liquidity, but this low, did it break any structure? The answer is what? No, it did not. And so that's why you cannot use it for Quasimodo. But you see this one now, this low broke this structure up here, and when price swept liquidity, this can be used for what? The Quasimodo. I hope that is clear. Maybe as we continue, probably we're going to see like more examples, and so that you can get what I'm saying more. I'm certain we're definitely going to see more examples though. We'll see more examples. We might see more examples actually. So all right. So let's like proceed. So for GBP USD in the month of July, you know, I only had 2 entries here, and I think these entries said they were traded live with everybody. So I guess I remember the day we took the trade, so they were live trades. So basically, yeah, this is what we can see, or we can note that GBP USD has been bullish. It has been bullish. Another thing that we can note from here is that price has engineered liquidity. All right, price has engineered liquidity, also swept. Price has engineered liquidity, also swept liquidity. This is the example of the engineered liquidity. This is the example of the price sweeping liquidity. Then, you know, we had a major pullback here using a Quasimodo entry. So I told you, after a major liquidity sweep, you can use that level for a re-entry for Quasimodo. That's if you paid attention to what I did here. All right, and so we had the Quasimodo entry. Now after that, we now have price break a major structure in this level. If you remember, there's something I used to tell you guys before. I'll say, see, the easiest way Now, and don't take my word for it, okay? Make sure that you check them by yourself if it's correct or not. The easiest way for you to take note, the easiest way for you to know if price receive liquidity or not, because you can anticipate these things in time. The easiest way is you want to check the kind of break or structure that you have. If price breaks structure, if price is breaking structure like this, and it doesn't, when it breaks structure like this, it doesn't break it, it doesn't close with a gap, no fair value gap, no imbalance or anything. Maybe after it breaks like this, price is just choppy, it's most likely going to sweep liquidity. Or maybe when it breaks like that and then it closes with a wick, it's most likely going to sweep liquidity. Don't take my word for it, just check it yourself. What's the logic behind that? What's the reason? To me, I feel like after that break of structure, the story is not complete. Since there's no imbalance, since price does two things, it's either rebalancing an imbalance or seeking liquidity. So since after the break of structure, there's no imbalance, price is choppy, it needs fuel, it needs something to move again. And that's why I used to tell you, I'll say there will be no significant move in price until liquidity has been swept. And so you will see most of the time when the break of structure does not have an imbalance, does not have an impulsive move, price will usually want to come back and sweep liquidity. We have the case here. After this break of structure here, you see price does not have an imbalance, price was choppy. In fact, what did it do? Came back to sweep liquidity, basically. All right, basically, that's just it. Now in this case here, you see that we have a major break of structure here. Does he have an imbalance? Yes. Does he have a major impulse move? Yes. So do I need it to sweep liquidity? No, I don't. I only need it to rebalance this imbalance and then move on from there. Do you understand? All right, cool. I even see, because I remember I see that we might have missed an entry here, because this is sweep of liquidity here again. Here. Why? Because there was a break of structure here. There's a break of structure here. And so we want to check if indeed this particular one was valid for the liquidity sweep. That's if eventually got entry, because after the liquidity sweep, there must be a shift of structure. The shift of structure must be there. So you see price sweep liquidity here. This was it, and then can you see the shifts? This is also something I used to tell you. I would say, see, it's a principle that you can use. I'm not telling you that maybe you can check it before price buy. Any buy setup that you have, if you go to a lower time frame, there must be a corresponding, like an opposite move that says you will see a sell trend. Price will be making lower highs and lower lows until it gets to your point of interest, and then it will create a shift of structure, which is what a lot of persons, a lot of you refer to as change in the state of delivery, market structure shifts, change of character, and many other names like that. ICT just calls it displacement. And so you see that this is the super liquidity that we see price doing. But before that, you can see this whole move, this whole wave of price coming down. And so this is the displacement. I've also thought, for those of you that have been in my community for a while, I've also thought that displacement like this, I use Fibonacci to 23.6 because it is a normal displacement and not an abnormal displacement. And so if you use Fibonacci to 23.6, this is why I don't use PDRs. I use the mathematical approach because it's just me. Some of you even trade better, so it's not by force you do that. So you just trade to the external liquidity. That's it. But one thing that you can also note from here is that no entry on any trade, without liquidity sweep being present. If you've noticed that, right, there've been no entry at all on any trade without liquidity sweep being present, and all of them are also reacting off from a particular zone. So you see that level where liquidity is sweeping, it is retesting off from maybe a fair value gap on another block. This one retested off from an a rejection block, right? This one here retested off from the fair value gap here, right? Just like that. This one retested off from the other block here, just like that. Now in this case here, yeah, price dropped down, and so we don't have a confirmation. Price is Quasimodo. Price is the Quasimodo entry principle here to move. Now I can also still show you this. Let me delete this. I can still show you that even after this mitigation here, there will be a form of shift in this level. So let's go and see it. Let's just go. Let's just check it out. You will still see a form of shift, that is, price will still shift structure. I might not even use, let me even use 15 minutes. Let's say I don't want to use that big time frame. I want to use 15 minutes. So you see the way price has been coming down, mitigation here. Now after mitigation, you can see the form of shift here. It still shifts. All right, price still shifts, gives his entry here because this is an abnormal shift. It gives his entry here. We use 50% and it pulls away from there after mitigation of the Quasimodo. Now, does this mean that, oh, you are going to catch all your trades like this? Obviously, no. You are not me. You cannot be me. You are you. Some of you are better than me. All right. In this case, in all these trades now, right, the only ones that I was able to capture only was just 1, 2, 3. I missed this one. I missed this one because it was on a Monday. I don't know what I was doing that day, but I missed this particular trade. I was not on this trade. But I got this, and I got this. I didn't get this in 9R. I'm showing you, because I don't do extended RR like that. I only used to do 5R. Once it's 5, so 3 to 5. Once it's 3 to 5, I go out. I also do 2R. I also do 1R, but it doesn't extend more than 5R. I don't know. The grace to do more than that has not come yet, and so I'm still working with what I can do. All right. So I think we can proceed now. We have been on GBP USD for a while, and we have seen what we can expect also for the coming week. All right. So I'm just gonna delete all of this. But let me just leave it alone. I just delete it. I know when I see charts like this, it's usually the way it does makes me uneasy. Yeah, I like it clean like this. So for GU, the present move is there's a break of structure here. There's an imbalance here. If you go to the 4-hour time frame, you see clearly that there's a very long imbalance here. So instead of price to, a lot of persons want to buy already from this zone because it's a key level, it's a breaker block zone. So I'm waiting for it to mitigate this OB here. It's an OB in 4 hours, it's also an OB in 2 hours. So once we have mitigation from here, we move off to the upside. Okay, all right. And yes, it's not by force that it does the exact thing that I want. That's like it's very important that I note it. It's not by force, because let me just say this now. Remember the 2 break of structure principle I just showed you. There is already one that I can see. So this means that if price maybe does this, it does this on Monday, and then it comes down like this, it's already valid for me. It's already valid for me to start looking for a bearish move and not a bullish move any longer. So the places where my own eyes will now be on now is not, a lot of persons will now say, okay, yes, they want to take the buy from here. So where my own eyes will be on will be here. Either this high that was responsible for breaking the structure down, or the new high that it forms here that is responsible for breaking structure down. But they are all depending on if price expands and gives a proper break of structure, because if market opens and it just comes down once like this, maybe with one candle, it doesn't count as a break of structure. A break of structure, I think I've taught it a lot of times, a break of structure is valid only when there's an expanded price action and the space is there. One day I said the easiest way to note a break of structure is when it has space. So when you look at it, they say, but that's too simple. I say, what do you want? You want it to be complicated or what? When you see enough space, price breaks away from one point to another point, you have a valid break of structure. But when you see one candle break, it's just like a single candle that moves past that level. It's not valid enough for you to use. An example is this here. You see this is a bearish move here. Okay, that is not a valid break of structure. This is another one here. This is not a valid break of structure because it's just a single candle move. But you see this here, this is a valid break of structure. So if you don't understand these things, you are going to like make a lot of mistakes. So you see this here, this particular one here, price moved from here to this to the upside here now, but that's not a valid break of structure. It's not enough. It doesn't give enough information to make a decision. And so you can see here, this is a valid break of structure. This is a valid break of structure. But why? It's because yes, price moved from one zone to another, breaking off from it. But the main takeaway point there is it must have what? It must. I didn't say should. It must have space. It must have space in between. It's the easiest way for you to know how a break of structure works or what makes a break of structure valid. It must have what? Space. Alright? The easiest way. Okay, so I'll just leave it at that. That's for GBP. If you have other this thing that you want us to check, you drop them in the comment section. Alright? Peeps Strategy. Good morning to you too. And good morning to everybody that is watching. You know, as I'm doing this, I'm already lost in the thought of what I'm doing. Most times I would not even check what we're doing to see. And to see if there's questions and all that. So but it's fine though. So I'm just checking if the live session is still on. And if okay, stay on, I can see this live stuff. So let's proceed. So we have for EURUSD. Oh boy, and my neck is really paining, and we're going to be here for a while. So I don't know why this neck is paining though. So for EURUSD, go to 4 hours. So let's just clear everything off. I remember how many buying on that place, but I'll just clear everything off to just do something. So EURUSD structure dynamic, that's been very dynamic of recent. So we have a break of structure here, right? And then this is the origin of the break of structure. So when you hear me say origin of break of structure, origin of the break of structure is where the break of structure where the price action started before the break of structure occurred. As simple as that. So that's why I just refer to it as origin, and I'm not the one that actually calls it like that. The first person I heard it from was what's her name now? This very big trader influencer, Happiness. Yes, Happiness. So I think she trades SMC, and she's on a head using that word origin of break of structure. And I feel like it's a much more very simple way to define what we're doing. So you see there's an origin of break of structure here, and there's a break of structure here. So EURUSD was bearish in all of June. It was very bearish with little pullbacks here and there. But now we're in July, and so it's July that we want to focus on. So let's say we go 4 hours, okay? We'll go 2 hours rather. Now this is what I'm also explaining to you when I say that you need a valid break of structure to be able to tell or to be able to easily, identify certain things. So you see, look at this now. Price move from this down to the upside, but this is not a valid break of structure. Where is it? This is a valid break of structure here. So in as much as a major break of structure occurred in this zone here, and some persons say, okay, our price is expanding. Indeed, yeah, price is expanding. But to follow what price action is doing, you have a break of structure here. You might be worried to say, okay, immediately price comes here, I will sell. No, don't hold your horses, because there's a break of structure here, and then there's also another break of structure here. So two break of structure occurred before we got into July. And so since this is the last break of structure, this tells us that we are where now. Are we still in a bearish market or in the bullish market? To me, I feel okay, we are now in a bullish market. it is starting, so it's still going on. I don't used to stay on a structure for too long. I stay on the structure as it prints out. So this break here, one. So let's call this one is one, right? And this break here, that's two. So this tells me that this is what a bullish market. And so where is the origin of this break? Here I identify it. You can see that price trades back into this POI here before buying again, because the structure is now was bullish. The structure is now bullish. So a lot of persons might have taken sales from this level. You hold your sales from this level because, oh, it's a breaker block level, it's a key level, yada yada yada, and many other things. But no, you're not paying attention to the present story. I'm not even talking about the full story. Before you can get the full story, you need to pay attention to what is happening now. So take away this. You see two breaker structures. Your idea, your immediate action to do is to what? Change your bias from bearish to bullish. And now since it's bullish, we have a super liquidity here. Given that this then becomes the external liquidity, which becomes our target, our drawn liquidity, my entry obviously is going to be around these levels. Let's go and find it out if there was indeed an entry at that level there. So yeah, so I talked about what's that thing called again now? Normal displacement and abnormal displacement. Like I said, some people that have been with me since know that this is an abnormal displacement. And so an abnormal displacement like this, we use 50% as our entry level. This is the reason why I don't use PDRA. I just use Fibonacci levels. And this Fibonacci level is like a mathematical approach to trading, but then it doesn't make it accurate. It's not like there are no times I miss trade, and sometimes I'll miss trade. Like I showed you one time miss. So like that. And so the first trade that I got on EURUSD for this particular month, the month of July, is just, it was not up to even 3 hours. It was just 2 point something. But then let's proceed to see what price did. Immediately after this TP, right? I remember we were on the live session that day and I said, okay, see, price has now broken structure here. There's a major broken structure, obviously. All right. Now, what was the next thing to do, in mind is what I tell you of Quasimodo, because there's a major sweep of liquidity here, which means that this level here can be used for re-entry. Indeed, they use it for re-entry. Yes, the whole structure. If I say I should explain this one, you might get confused because this is full story order flow. We're not doing that now. You just get totally confused. I want to stay with present market structure so that you don't get confused. So after this, we see price go up and then come down. It goes up again and breaks structure for the first time here to the downside. Immediately you see this, your idea should be coming up that it seems something want to happen. But what will majority of you do when you see a price action like this? You see that price has now, broken structure to the downside. You might call this an engineered liquidity. Alright, that you want to use a POI just below so that you buy from there. This is the reason why I used to wait. I'm very patient and I wait for confirmation. I don't care what anybody is saying. I don't care what anybody is doing. I will wait for my confirmation. If it takes me 2 days, 3 days, 4 days, even if you hit stop loss, it's fine. So after price break structure here, you can see it retraces up and then break structure for the second time. And what do I say? I say two break of structure tells you what? Tells you your trend. So immediately after this, I go and find the origin of what? The breaker structure. The origin of the breaker structure becomes my immediate level where I'll be waiting, okay, for price. Should you understand? And so what do you see price do after that? Immediately after that, you see price go up, sweeps liquidity, obviously retests from all this POI. Like I told you, I said, see, when you see liquidity sweeping price in any currency pair you are trading, or maybe in indices or commodity, whatever you are trading, when you see liquidity sweep, it is actually respecting one of the PDRAs, maybe a fair value gap, maybe another block. It is obviously respecting one, maybe a rejection block, but it's coming from somewhere, something pushed it. It needed that liquidity to move. Remember, I put in mind, I said there will be no significant move in price until liquidity has been swept. Do you remember that? And what do I say? I said it is easy also for you to anticipate the sweep of liquidity when the break of structure does not have an impulsive move and it also does not have a fair value gap. Look at this here. Does it have an impulsive move? No. So in my mind, I'm already waiting for the sweep of liquidity here. This break, does this have an impulsive move? No. What does it have? Choppy price action, price closes with a week. Immediately I'm waiting for what? The sweep of liquidity here. That is basically what I'm saying. Do you understand? So after sweep of liquidity here, obviously go to 5 minutes, 15 minutes. Most of the time I wait 15 minutes and then wait for what's this thing called now? A displacement. All right, I wait for a displacement of structure, so you see how long this is. And I can tell you that this particular trade now, I'm not even sure that I even got an entry. I'm not sure I got an entry. I'm not sure at all. But let me show it to you. So you have super liquidity here. Before that, you have this one as the low. So normally in this case, I'll use 50%, either here or here. I use 50%. I don't remember taking. I don't remember taking this trade at all. Obviously, I know it not come here. So let's see this is. I'm very sure I didn't get an entry because I don't remember taking the trade, and this is why I said I will also miss some trades. I will miss some trade. In fact, I will lose some. So basically, but that's what facilitated this sell to the downside. But I remember this sell very well. But price facilitated this sell to the downside. Now I remember I took this buy though. The only reason why I took the buy was simple because of this. This one is full story order flow, which is has to do with the Quasimodo from the higher time frame. 4 hours actually. I saw it from 4 hours and then I took the buy from there. But then let's just proceed. After this sale, USD responded from this Quasimodo here, and then we have this break of structure. So why am I presently on a buy? Very simple. Before price broke the structure, you see that it engineered liquidity here, swept it. After super liquidity, this POI becomes my own area of interest, or as we call it, point of interest. And so the only thing I waited for is like a shift of structure. I waited for a shift. You can see the Fibonacci tool is still there. So I waited for a shift of structure to come to 50% and then take the buy from there. So I'm still holding on this USD buy though. I'm only holding it to the external range liquidity. And so this is all that is going on with USD. So for now, like I said before, for now, the structure for USD is what? Is bearish, is bullish rather. Still looking at it in a bullish scenario. Not totally confirmed yet though, but you know what I mean. So this super liquidity is the only one that is making me say, oh yeah, let's stick with this. Okay. Your session is still on. Okay, thank you for that. So next we see USD CAD. USD CAD has been doing some crazy things ever since. Basically all USD pairs will be stressing traders like mad, like bro. USD pairs are very stressful. I'm not gonna lie to you. Trading USD pairs is stressful. So I'm presently on this one spot. Like I said, we're breaking down what has been going on in the month of July. Okay, so I think here July 1st is here. So before that, pay attention to this one because this one gave me a lot of confused buyers. I was confused a lot of time when I was trading this USD CAD. I was really confused, but I tried my best, sharp. So if you look at it, right, price was bullish before, clearly bullish. All right, now this was the ending of June. We had the break of structure here, so the only thing I needed was what? A second break of structure here. But instead of price to come down immediately, first, what did price do? It first of all went up like this and then broke structure like this. So it broke this structure 1, and then also broke the structure here too. Hold on, let me just come out. And it broke the structure here too. So this became my origin, like origin of break, point of interest, or however I want to put it, for buy. Remember, I say a super liquidity will always occur around a key level, which is price will be respecting a PDRA. And so what do you see price do here? Respecting an order block here. And so this is like a buy level. I remember buying this, but it was not complete. This is why I tell you that there are going to be losses. Anybody that promised you, you know, I've seen some people, I've seen some trading mentors, you know, teaching, or I've seen some tutors, I've seen some creators that teaching you certain things, and then they give the idea that there are not going to be losses, and so you feel like you taking losses is abnormal. No, losses is normal, because I'm putting it to you, the only thing that is guaranteed, we should speak pidgin, like the only thing that is for sure in trading is that you will take loss. That's the only thing I can tell you that is promised. It is that you will take there's no promise that you will take profit. There's no promise at all. Please, my water. There's no promise at all that you are going to take profits. None, not at all. The one that is promised, like I can tell you that for sure you will take it, is loss. Why am I emphasizing on this? So that you understand. It's not like, okay, you're seeing, we're doing study session, you're seeing TPs here, you're seeing mysteries here, you're not seeing losses. You will not even find that in my own session, God forbid. I will show you everything as it's happening. And that's why I usually will do live sessions, so that we see the trades, we take the trades together. Alright. Some of them you can still see that the entry stuff are still there. So alright, now this is the trade here. After the super liquidity, I remember this was like the ending of June. I remember this particular trade very well. So what price did is it shifted rather. This to me I count it as abnormal, and then I bought from here. My stop loss was just slightly below this level, and then my target was at the this thing, external liquidity there, you get. So price initially mitigated though. It went about, I think it went about 1 hour plus, I guess. I remember 1 hour plus, and then it just dropped down. I hit stop loss here. We stop loss here. So the beauty about understanding how liquidity stuff works is that once you hit stop loss, you quickly change your bias. You can quickly reevaluate, okay, I'm on the wrong here, so let's go on the right structure. So the order flow has shifted from bullish to bearish, and so this is a bearish market now. So where's the breaker structure here? We see one breaker structure, but that's not all. And so that's why it was hard for me to even get the re-entry. That's why I said, remember before we started, I said that USD card confused me a lot in this July. So I saw this first breaker structure. The only thing I was waiting for a very long time was the second one. But before it even did it, it then came here, it broke the structure. And then I had to say, okay, let me start anticipating a bullish move. So you will start anticipating a bullish move from here. Some of you trade in a very smart way, so you might have gotten your entry from all of this place down. But not me. I'm trading the present market structure. So after this break of structure here and this break of structure here, then I said, okay, it's my time to shine. It is my time to shine. This was the key level that price respected off from here. Okay, those people that trade CRT. So this is it. So price respected off from here. My own entry did not come in all of this. So my own entry only came after sweep of major liquidity here. This is only when I got my own entry, nothing else. And like I told you, I said every sweep of liquidity responds from where a PDRA. It might be a rejection candle, whatever it is. Now in this case, this is a rejection candle. Price rejected from here. And so I don't know. A lot of persons don't even know about rejection candle. If you pay attention to ICT videos, it's ICT mentorship videos I watched. Nobody taught me. I don't have a mentor. So it's not like I didn't have a mentor that sat me down, taught me all of the I didn't. It's ICT videos I watched. So, but many of you are lucky though. So I went to 5 minutes here for USD card. So you can see that the structure became bearish after that. This was the first break of structure, second break of structure. Immediately, price became what? Bearish. Confirmed bearish. It's not like it was not bearish, because before this, price was already dropping, right? It was already dropping. Cool. So it only became bearish to me. Let me put it in that way. Bearish to me because I work with that two break of structure principle after these two break of structures. And so I got this entry here. What did I tell you now? So after the super liquidity that occurred here, you can see that there was a displacement. I've told you this. If you are buying, go to a lower time frame. Look for when price shifts from a sell to buy. If you are selling, go to the lower time frame. Look for when price shifts from a buy to sell. So you can see price was buying in all of this level and then shifted here. I got my entry for 23.6% here because this is a normal displacement, not an abnormal displacement. Okay, and this one was very long, and so like I told you, I don't do big RR, only 5. It was very long. I remember this particular one, so I only did 5R. Yeah, I see so many people who the trade, they did the longer things. Well, I used to be jealous of you people. Well, I cannot do it. It's just, I'm sorry. My one is just 5. When I'm done with 5, I'm done with it. So after this liquidity here, price came to the external range liquidity. I also noticed that there was a major breakout. I posted this on X. There is a major breakout on USD card, and we might likely see a very long drop on it. And indeed, you can see that from 2-hour time frame, price came down. Let's take off this. So I don't like when the whole stuff is not clear. So take everything off. So you can see that from the 2-hour time frame, right? You can still see there was a break of structure here, so this became the origin. Okay, there's a break of structure here, so this became the origin. But guess what? Inside these two, is only one that gave me entry, not two of them. Let me show you. So after this super liquidity here, it just went to like many time frame to go and check. Okay, if there was a displacement, indeed there was a displacement. This is a displacement here. So this is supposed to be my entry, 50%, but price did not come to 50%, and so I missed this particular drop. I missed it. I remember missing this trade, but this one, no, I did not miss this particular one because this one gave me displacement to entry mode. If people don't understand displacement, so displacement 1 is when you have, let me just do it quickly. This is displacement type 1. This is normal displacement, and so there is also this type. Price comes down, but instead of taking this high, it then does something like this, comes down, then sweep liquidity before moving up. So before taking this high, it comes down, go up, then takes this low, like this. So then go up. So that's what happened here. So before taking out this low that is here, price did what? Came down, went up, then took it off. That's when I got my entry. So, but I needed to be careful because to me, see, two things I don't like to do. Like people that already know me for a while, that they've been watching the live session, they've been following me since last year that I started this live session, right? Most of you know that. One thing I don't like is tight stop loss. One stop loss is too tight. You cannot count me in that kind of set. You cannot catch me there. I'm not going to. I will extend the stop loss. I will extend the mad. Or maybe the TP you are seeing 10 hours, 12 hours, 15 hours. You will not find me there also. I'm not there. I'm not in that kind of setting. That's why I trade for the 4-hour time frame. I'm not just going to be in that type of, So I saw this, and this is where I was supposed to get my entry from. I got my trading view alert. When I looked at it from entry, it was almost 11. Let me see. I don't forget now. 14. I say no. That kind of a thing when you see, and this was before price played out, obviously. That kind of a scenario when you see that, which kind of Which kind of target is this? It's looking like price wants to set you up. No, 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 no. So I didn't take that entry. I said no. What I was going to wait for is another like sweep. I was going to wait for another sweep, and indeed he gave the another sweep here. So it was after I did this one, I was now calm to say, okay, I'm going to take the trade from here. That was the stuff we then saw, which is this thing you saw the before I deleted the position 2 that you saw before I deleted it. And mind you, this was giving a 6.41 hour. I didn't state it's 6.41 hour. I closed exactly at 5. Exactly. Not be my papa game market, not be my mama game market. To me, the way I used to see all this thing is that if I can get 3 hour, if I get 4 hour, I can get 5 hour. Is enough. Why? Because I'm risking 1%. I'm very patient, so wait for my entry. So if I risk 1%, you know, say, and it's only advisable that you should risk 1% if and only if you have a hindsight to your trading. There's an edge to what you are trading. If you don't have, you can still use 0.5%. There's no harm in it, because when your account is lost, you don't have anything to do. You are finished. Basically, you are finished. All right, and that's just why I use 5% and 5 hour max, and sorry, and 1 hour, 2 hour, 3 hour, no problem, because I'm risking 1%. If I get 5 hour, I get 5%. If I get 4 hour, I get 4% of the trade. And so you see, it makes sense like that. But sometimes you see the distance, like interval, when this trade play out, they're very long. For example, this trade, the first trade I got in this month of July on USD card was on the 13th. Before I even saw that trade is like the next week again, which is just 3 days ago on Thursday, which is some days after. But before this particular one, you saw this, right? Before this particular one, you see how long I waited. There was no trade in all of these days. There was no trade. I didn't see any trade at all until from the 30th. So the 30th was the last time I saw a trade, and I had a loss on the 30th. And I didn't see any trade again till on the 13th. You see, that's like almost 2-3 weeks I had to wait for price. So that's just what you wait. If you cannot wait, you cannot wait. And you get the way you go wait, you go switch up your loss. So it's just trading, you take your loss, you move on. Nothing. Price action is just like that. The only thing that you need to be careful about is know your structure, know your entry, know your exit. That's it. And so this is how I got this particular trade on USD card. Right. So presently we can see that the structure, because the main focus for today is not just the trade, it's the structure. I'm trying to simplify market structure for you to easily understand using the two broker structure principle. You can see that the only time that we ascertained or we started saying, yeah, well, I'm going to sell is when price gave me this broker structure here and this broker structure here. That's the only time. Like I said, some people already had their entry from here. Like some traders are smart. Some traders, I'm putting to you, there's no time you will catch me. I don't know who is listening to this session now. There's no time you will catch me that I'm now talking down on traders, on strategies, and you cannot find me that kind of a thing, because I feel like, see, every traders are unique in their own way. So just the way I got a loss in this place, another trader got the profit there. Just the way I could not see that there's a sale in this level here. There are traders that got sales from here. In fact, there are traders that got sale from here. From here. Do you get what I mean? And it's not luck. I don't mean luck. They just have that, they've put in the work, they've studied to that extent. Me, I'm operating from the extent I have studied, and I'm still studying. So that's just it. And so after this two break of structure, right, that is when the information to me was complete that I can start looking out for sales. And so I had the first sale there. I missed the sale here, and I had the second sale here. Just 2 trades on USD card this week. So presently, the trade is bearish. Now, remember what I said for Quasimodo entry. When there's a sweep of liquidity, price is obviously responding from what? I say a PDR. And you can use it as long as it has completed its move. You can use it for what? A re-entry using what? Quasimodo. That one, you don't need inducement. So let me give an example. All right. So let's see. I've not seen any example yet too, because this is super liquidity. Price did not come back to it. So this is super liquidity here. This is super liquidity here. So this will have been where price would have come back to. Price did not come back to it because it gave another super liquidity here. No, it has given a super liquidity here. I can say I want to get my own re-entry if price comes back to this level here. Yes, because there's super liquidity here. Now, you see, I call this super liquidity. I did not call it protected low or protected high. No, because actually there's nothing like protected. We are dealing with in a field of uncertainty, probabilities. Either A or B, either B or C, either A or Z, something like that. So it's just a refined edge will just put you in a better position when you're trading. So in this case for USD card, if I want to get the re-entry, because I already hit my TP, if I want to get the re-entry maybe next week, this is the zone I'll be waiting for a sell. And again, only if there's confirmation, only if there's a shift. The confirmation is a shift that happens where in the lower time frame. So that's for USD card. Okay, so structure is still bearish. We still want to hold the sell for a long time. So I'm just going to delete this, take it off. I like the chart to be very clear. I don't like plenty marking. Take it off. Okay, so EURJPY. I don't think I've had trades on EURJPY this month. Of EURJPY, I've had like loss. I think I had a loss on the EURJPY safe. I don't think I've had trades like that now. I don't think so. Let me check this chart session. Market will really show you what you want to see. Exactly, my bro. Exactly. Market will really show you what you want to see. That is everything. And you know what you stated is very right. Very correct. If you say you want to see breakout, that breakout you will see it too. Because it has a way the market will even show you what you want to see. You'll be deceiving yourself. Especially those people that you're not telling yourself the truth, right? You're sticking to one bias. You remember that kind of a thing when you're only seeing buy, you keep on buying and as you continue to buy, you continue to hit stop loss. But you are saying, but this market, it show me this thing now, it show me. So it's true, the market will only show you what you want to see. It is what we trade is our belief, what we see. It is what you believe in. All right. So that's a very good one from Prince. All right. So from the month of July, before we entered into July, we could see that the structure for EURJPY was bullish, clearly. So you see, to me, I counted this as a first break, and I counted this as a second break. So the only thing I was doing for is, okay, at the end of the month, I was waiting for maybe a super liquidity, something that's structural that I can take, but I didn't see any. So all of this, I missed out on all of this. No entries at all on all of this. So I had price dump here. I was waiting for a second break. Price did not give me a second break. I had price break structure here, and then indeed break structure. You can see that this one was still here to tell you that it was a past stuff I waited for. So the only entry that I had on this, I had stop loss on it. So price swap liquidity here. Let me show you. After swap liquidity, gave me entry, clean entry. Like the entry is clean and mad, and this is the reason why you don't risk your life on one trade. So after this swap liquidity here, I used 23.6% here, and I, had my stop loss. I had my stop loss hit that same day. It wasn't so long, right? I had my stop loss hit there. And after that, I don't think I've had a trade because this is super liquidity. This sweep is one that facilitated this whole move. And now we have break of structure here. We have, so it's, if you go to 4 hours, I think if you go to 4 hours, it might be worse. 4 hours, you'll not even see anything. It's it. So it's worse. It's worse. I'm just checking if the European is live. Don't mind me. All right. So we've been up to an hour, right? We've been up to an hour, up to an hour. I don't think this thing is live again now. Ew. Is it still live or not? Come. Is this on network? Retry. Jesus. So the next one we're going into, looking at the same EuroJPY rather. Let me move this. Please, if this thing is still live on your end, notify me. I can't see. I don't know if it's still live on my end. This nigga is not showing anything. Drop a message in the comment section. That's a live chat. I will see it from here. So if it's still live, drop a message. It's connected already. Okay, I think it might be back. I guess so. I'm not seeing any. No, it's like I think 30 something people are watching. Nobody for EuroJPY. Okay, for EuroJPY, this is the structure that has been on. I had a buy bias. He hit stop loss. Nigga moved up on me, so price is now coming down. This was not a super liquidity. I don't know what this one will be. So this is the last origin. So meaning that price might most likely just come down into this level and then move off from here. Yes, that's what EuroJPY do, by the way. Then for the next one is on Euro card. I think Euro AUD. Yeah, Euro AUD. Now in the month of, hold on, let's address this thing. I don't know why 5G network is not coming up. So in the month of June, Euro AUD was bearish. All bearish. You can see the bearish move was only ascertained, or I came to that conclusion when had two broker structure. There's a super liquidity here, sent price to the downside, you know, but this was like the beginning of the month. This month, that's July, because today is what's today's date again? Today should be around 18th of July. Today is 18th of July, right? So at the end of last month, that was when price shifted. So throughout June, or while in June, price was bullish. Okay, price was bullish. But I shrink this thing now just to show something. So but if you look at this, you see that every time price was bullish like this, there was a pullback. Every impulsive move, there was a pullback. For every impulsive move, there was a pullback. But like I said during the last live session, I said it looks like this pullback is one that will not respect or might not respect. We don't know. So it might be that price will just continue again, but it's looking like price might just go down from here. Do you understand? And why I came to that conclusion was because, okay, there was now a breakout